My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me, like everybody else, at Jim Cramer. You can't understand this market unless you understand how big institutions that are involved in stocks do their business. So much of what you see on your screen is driven by not the Fed's comments, well, it was a little boring today, even with that Zoom quadruple box, whatever they're doing, or retail sales that we got, or housing numbers, but what's happening at the morning's research meetings all over the country. And that includes today, where the Dow gained 37 points, even as the S&P ultimately dipped 0.46%, and the NASDAQ lost 1.25%. More on that later. Today seemed like it was dominated by the Fed and the amazing Snowflake IPO, biggest software deal in history. And as someone who helped bring the Microsoft IPO to Goldman Sachs 35 years ago, I know a big deal when I see one. More on the demons that deal unleashed later in the show. But until the late afternoon sell-off, we had a nice rally going today, and that was all about what's going on behind the scenes. Every morning at these large firms, they have a meeting. In the meeting where research analysts come out and they pitch the sales force on individual stocks and entire industries, either as buys or holds, or very rarely sells. After the pandemic got rolling, though, almost every piece of research that came out cut numbers for individual companies and suggested the situation was going to get far worse. The conclusion? Sell, 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 sell. I've never seen so many sell recommendations in my life since 2008. Makes sense. Obviously, the lockdown was going to hurt
the house of pain.
America's a service economy. How the heck was that supposed to hold up when so many services were off the table? For most analysts, their first thing said that forcing people to stay home would devastate the economy. Understandable. But that instinct turned out to be wrong. In part because the government gave us more than $2 trillion worth of stimulus so that consumers could keep spending even if they lost their jobs. What really happened? Okay, parts of the economy have absolutely been devastated.
The house of pain.
This is a very bad time to own a bar or a restaurant, but other parts, they're on fire. COVID didn't wreck the way we do business in this country. It changed the way we do business in this country. For example, e-commerce is just extraordinary. It's lit. And last night, FedEx lit up the sky with its unbelievably better than expected quarter. Not only were they able to raise price, they are also seeing immense increases in volume. Management had thought they'd be shipping 100 million packages per day by 2026. That was their goal. You know, last night they said that now they expect to hit that number in 2023. You know, it's kind of like people with their eyes glazed over. That's astounding. It's an astoundingly positive revision. FedEx is assuming that whatever digital transition we're going through here, it's not done. In fact, it's going to stick with us even after we beat the pandemic. Do you know that a year ago, e-commerce was only 15% of retail? Now, according to FedEx, it's 21%. That's a huge shift. But you have to figure that number will just keep going higher and higher. But here's the rub. It's zero sum. As Executive Vice President Bree Carreri pointed out on the conference call, and I quote, U.S. spending that would normally have gone into services has shifted toward goods. Spending boosted further by pent-up demand, end quote. E-commerce is currently booming at holiday levels, while the service sector, she tells us, is severely impacted by the pandemic and high unemployment rates. So the analyst who covers FedEx, they all go over to what's known as the hoot and holler, or, yes, the squawk box, and they tell their salespeople that they should call the firms they cover, and they are boosting her, that she's boosting her price target, FedEx, because of all these positives and because of the upcoming holiday season, which they said will be like no other. They're not saying sell, sell, sell anymore, which is what they were doing when the stock was at 120 in the spring. They are saying buy, buy, buy at 235. That's right. Buy. They were telling us to sell it. Sell. When it was literally half of what it is now. Then professional money managers, clients of these firms see this positive research and they start thinking about the implications. First, the idea that America's become much less of a service economy, that's huge, even if it's temporary. Are we really turning to more of a manufacturing nation, or are all sorts of service industries just doing very badly? When we heard from Fed Chief Jay Powell today, he made me feel like we desperately need another stimulus bill from Congress because it's the only way to save these service businesses. I think he's right, but I'm skeptical that Democrats and Republicans will be able to reach a compromise. Either way, the pin action from FedEx caused the transports to roar and even allowed Boeing to rally on a day when the House of Representatives released a horrendous report about the company's problematic culture. Next up, we got a bunch of positive calls on housing, some spurred by what we heard from Stuart Miller, the executive chairman of Lennar, last night after the company's incredible quarter. Lennar stock got crushed in response to its numbers yesterday, but this morning the analysts got behind it en masse, and it came roaring back today, taking the whole cohort with it. Again, just like what we heard from FedEx about the goods economy overtaking the service economy, the strength in housing keeps catching the analysts by surprise. We have the incredible paradox of high single-digit unemployment coexisting with incredible home building numbers and great demand. Now, that is not supposed to happen, even as this is an unprecedented situation. So the rally in Lennar gets delayed until the sell side can explain to the buy side what's going on. And the internal research people realize the pandemic has changed everything in this country. If you can work from home, you're not waiting for a vaccine. You're buying a new home with more space that's further away from your job. Because who cares about the commute when you can work remotely, and it's even more profitable for most firms. Those homes have now become homes/offices. Look at that number tonight from Herman Miller, the maker of Aeron chairs that I told you to buy last Friday. They can convert any bedroom into an office. Yep, houses are being re-outfitted for the COVID economy, and that's causing sales to soar. And, of course, anything involving furniture, whether it be at home, whether it be Wayfair, whether it be Williams-Sonoma, to do amazing. That's how Miller could say something so counterintuitive yet so true. The pandemic has created a housing boom. So we have a boom in shipping, we have a boom in housing, yet we still have a weak economy that needs help from Washington. I know it seems crazy that FedEx and Lennar could be doing so well if the economy's in such bad shape, but you got to remember that the weakness is concentrated in small business that have nothing to do with the stock market. What else? We've written off all sorts of ne'er-do-well apparel plays and retailers like Coach, now known as Tapestry. Amazingly, this cellar dweller caught an upgrade today, and Tapestry's was one of the S&P's biggest winners. That fired up the rest of the down-and-out retailers, Kohl's, Nordstrom. I prefer to stick with the tried and true and best of breed, like Lululemon, which is down too much from its high. But there's no denying the Tapestry upgrade bolstered the entire group. Finally, there's Larry Colton. He's the CEO of General Electric. He spoke at a Morgan Stanley conference, the annual Laguna Beach conference that I never got to go to. And he said something incredible. He expects GE to have positive cash flow in the second half of the year. No wonder the stock rallied more than 10%. I bet this stock will really get people excited tomorrow once everybody knows about it. I don't know anyone who's really expecting positive cash flow from GE. The pin action here, again, should take up all the analogous ones. You're going to see 3M go up. You're going to see Honeywell go up. And also Raytheon, which remembers the old United Technologies. That's just a sample of what the big institutions talked about this morning. It's how the manufacturers and transports and retailers could rally like crazy today, even as the Fed chairman sounded pretty downbeat and the tech stocks got hammered as people sold so they could buy a piece of Snowflake. And we still need a stimulus bill. But the bottom line, these research firms explain the impossible today. We're seeing a booming goods economy in the midst of a terrible services recession. That's the opposite of the United States of America. If we get a stimulus package, both sides of the economy, though, could roar. Without it, different story. But if the last 6 months are any guide, it won't be like anything you've ever seen before. John in Connecticut. John.
Hi, Jim. Thanks for taking my call.
You're quite welcome.
Several months ago, I purchased DraftKings for my kids. It's had a significant climb since then without sports even taking off. Should I continue to hold it with the expectation of the sports increasing in the future, or should I take some of the profit?
I like the company. In full disclosure, I do a program about sports called Bull Market Fantasy, and they just signed on as one of our sponsors. I just wanted to point that out. But I think it's a great company, and we've had them on numerous times, and they're very, very smart. Jay in Florida, please, Jay.
Booyah. Hey, Jim. Big fan of yours.
Thank you.
Shout out from Clearwater Toyota in beautiful, sunny Clearwater, Florida.
Oh, my God. It's spring training already. No, we're still losing. What's up?
No, nothing much, man. My question's on United Airlines, ticker UAL.
Yes.
I'm just wondering, why are other airlines like Delta, they're having increased price targets by analysts, and United is being downgraded? I don't get it. I understand that United relies heavily on business and international travel. However, they have the most upside from their 52-week high compared to other airlines.
Jay, listen to yourself. You just named exactly why it's not working. business and international travel. Do I want to go someplace, like let's say you want to go to Italy right now. Here's what happens. You get on a plane, you fly to Milan, you get off the plane, and they put you back on the plane. I don't think that's a good use of your time or money. Let's go to Mark in Florida. Mark.
Hi there, Jim. I'm looking for some of that great Cramer insight you so generously share with us.
That's very kind.
On the group of packaged food stocks, and one stock in particular. The group seems to be coming steadily down, even with the possibility or even a likelihood of an uptick in the coronavirus this fall. Campbell and Kellogg have been getting hit especially hard.
Yes.
What is your outlook for the group in general and for B&G Foods in particular?
I think the group's come down too much, too hard. People like Marriott more than they like Campbell's. Okay, I get that. If the economy comes back, maybe you can buy that. But you know what? B&G, we had Ken Romanzi on recently, and I thought Ken made a very compelling story, very compelling, about how B&G's dividend is safe. It can even grow at 7% right now, and business is better than expected, particularly because of Green Giant. I like the stock. You can't understand this market unless you understand how big institutions do business. Today, these research firms explain the impossible, and it is impossible. Oh, man, money tonight. Campbell's soup. Sales have surged during the pandemic. But can the company turn new customers into steady purchasers? I'm talking with the CEO. Then, 12 IPOs have doubled year-to-date in their IPO debut. Now, so how is the newest member of the IPO class of 2020 performing? I'm eyeing JFrog after its first day of trading. And in September 2019, activist Starboard Value entered Box. Tonight, I'm sitting down with the CEO 1 year later to look back at the company's performance. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.